Hey everybody, my name's Allison Ostrander. I'm the Director of Risk Tolerance here at Simpler Trading. And in today's video, I want to walk through an Amazon earnings trade idea. Now, Amazon typically, not always, but typically is usually known to have some sort of gap move around the announcement. It's not uncommon to see some sort of volatility, either up or down on Amazon. And so what I want to walk through here is the idea to trade off of that potential volatility. Now, the downside for Amazon is it's going to be tomorrow using Friday's expiration. So there will be no time to manage this, right? So that means whatever capital risk you put out there, you have to be 100% okay losing. For this trade idea, what I'm looking for is volatility. If there's no volatility, if Amazon is a non-event and remains flat, this trade will end up losing. So please be mindful of that. And if you think it's going to be a non-event, I'm happy to walk through a trade idea for that as well. But the one I personally would lean towards is playing off that higher probability that we'll get some sort of gap or volatile move off of the news tomorrow. Now, I would wait to put this on into market close. So keep that in mind. If we're trading at 190 into market close tomorrow, then that's going to change what strike levels I would be looking at. But let's say we're at 192.73 going into the close tomorrow. The anticipated range for this expiration, including earnings, is 1147. So what I'd be looking at for this is likely a double vertical spread, or you could call it buying to open an iron condor. But we want to play both sides. So if we got an $11.40 move to the upside, that should put us around 204. So let's kind of meet in the middle with the strikes there, the 202.50, 205. That's currently about a 65-cent cost basis. If we were to go to the other side and see an 1140 move lower, we'd be around 181 and change. So once again, we'll go with the strikes that are in the middle of that. And in total, you're seeing that this is about a $1.25 cost basis. So if we at the very least see a volatile move within the anticipated range, if not greater than that, which isn't uncommon if you get a gap move on earnings on Amazon for it to be greater than that anticipated range. But at the very least, if it is that anticipated range, then we know that our short strike should be right at the money. And as you can see, this allows for an even risk versus reward. Anything greater pushes the spread in the money, should allow for a nice win. The other way you could look to do this, if you're okay with the risk, is consider also a debit broken wing butterfly on each side. This is what I call my compound butterfly strategy. And in particular on this one, the combination of these two butterflies work if you're looking for a volatile move. So the 202.50, 207.50, 210 is about a 76-cent cost basis. If we do the same thing on the other side, because once again, we're not sure which way it's going to gap, we just know that there's a good probability of some sort of gap or volatility. And you're looking at about 75 cents over here. So in total, your risk is about $1.50. Your max profit potential is $3.50 if you pin at one side or the other going into the close that day. If it goes completely in the money, it still allows for $1 profit. So not a bad risk versus reward. If you think it's going to be once again, if it is a non-event, either of those trade ideas are going to lose. So if you want to keep it the smaller risk, probably the double vertical spread makes a bit more sense. If you're okay with that higher risk tolerance because you want that higher profit potential, then you might consider the broken wing butterfly. Otherwise, though, if you think it is going to be a bit more of a non-event, you could always look to sell an iron fly instead. If we go out 12 points roughly on each side, you're getting about a 921 credit, currently a 329 risk. Now, this might change a little bit into tomorrow, but the idea is if it's a non-event, if it remains flat, you're definitely going to get a huge crush on premium, and that would allow for a nice profit. But if you do see any sort of 12-point move either up or down, then you have to be okay with the risk. So just two different trade ideas. Like I said, I would lean towards one of the volatile trade ideas myself, but hopefully that helps you out for those of you interested in playing Amazon earnings. As always, may the trade be with you, my fellow Jedis, and I look forward to talking to you next time. Bye.
Hey, Allison Ostrander here, Director of Risk Tolerance at Simpler Trading. Thanks for watching the video. If you enjoyed this video, please be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. As always, may the trade be with you, and we'll see you in the next video. Bye.